Hello, welcome to Property Concierge channel, where we share a lot of insights into property investment and wealth creation generally. In this video, we're privileged to have Mr. Azim Khan. We talked about global property and we shared a lot of insights. We talked about investment property in the UK and Dubai. What are the differences? What are the things people need to be aware of? The history. What is the best type of investment? We talked about off-plan investment and how that works. We talked about how foreign investors can invest in Dubai and invest in UK. We shared some resources on platform PropTech developed by Azim Khan and his partners, making it simple to invest in property. So there is a lot of wisdom, a lot of nuggets shared in this video, and I would encourage you. It doesn't matter if you are a experienced investor or you're starting for the first time. There is a lot for you to learn from this video. So I would encourage you to spend your time and watch this video, like and comment. Help us to build this community together. We're looking forward to bring you exciting interviews from seasoned professionals in different aspects of their journey. And this is one of them. I'll say go right in. Make sure you subscribe so that you are aware when we have um, releases our videos on this channel. Looking forward to working with you and learning alongside with you. Have a great time. This video is a good watch for you. Thank you.
Okay.
Hi, good morning, Azim. How are you doing?
Good morning, Deji. How are you? I'm
I'm
good,
very
thank you.
good. Yeah, thank you for jumping on this. Yeah, we been talking a lot lately and been learning quite a lot from your experience. And I thought it would be a very good thing to share with my network as well. So thank you for coming in.
No,
I'll give you a few minutes. I mean, we have a couple of questions. Mostly we'll be talking about properties, finance, and everything in between. I know you've got a wide experience, so we'll share a bit on that. And I think it's really helping people to see how property work,
yeah.
both UK and globally. And for some of my investors, I mean, I've got a lot of investors coming in from African countries, and a lot of people don't realize there's an opportunity in there. So we'll talk a bit about that. We'll cover quite a
Yeah.
few things, your experience, your background, what you're doing and stuff. So let's start with that. What's your background and what can people take away from this interview?
No, no. So thank you, obviously, Deji, for organizing this podcast today. So yes, so just a brief background. I promise I won't bore you too much with too much about myself. So just a general background. So my background's actually been banking and financing. So I'm originally from a city called Manchester in the UK. So I studied banking and financing. Then I went into a banking sector, a Spanish bank called Santander, where we would do the financial planning and mortgages. So we were advising clients. I always had a passion for property purchasing at a young age. Started buying properties when I was at university. Uh, got the idea of obviously rental income at an early stage. And then from there, obviously, as I got more matured and obviously started to establish myself, uh, then obviously got some more properties and from there started building the property portfolio. So background has always been quite banking, a lot of banking regulation compliance and financing, obviously advising clients on financial planning, short, mid, and long term. I moved over to the Middle East in 2012. So I've been here just over 10 years. I set up a company in the Middle East called Gulf Coast Financing, which caters for international clients, local clients, the GCC clients that are looking to purchase properties in the UAE with the help of mortgages. So we then introduced mortgages. We work with a panel of lenders in the UAE that caters for international clients. And obviously from there, we obviously expanded. But the properties has always been close to myself, and obviously this is where obviously we got into the property market. So that's a general in a nutshell. Just like I said, I won't tell you too much about myself, but as an overall, I think banking and financing and property investments has always been quite a core subject for myself.
Thank you for sharing that. Yeah.
No
Quite
worries.
quite interesting to see we share some similar background. Worked in Santander at some
We
point,
do.
meeting Kings,
That's
and
fantastic.
it's always been that love for finance and property. So that's one of the reasons I wanted to bring you on this podcast, just to share your experience, because you've got that wide experience from working life and then transitioning into your own business, which is quite an interesting
Great.
aspect. But more importantly, the focus on property, not just in the UK, but globally. So we're going to go
Great.
into a bit of that. So, I mean, that just led us on. So give us like your overview currently with the current market trend. I think using UK and Dubai as a case in point, what's your current overview
Yeah,
of the
so,
current
so
market?
the current market, as I'm based in the UAE, so the UAE market has seen a dramatic increase in terms of property prices are increasing. There was quite a big dip just during the COVID period, and I think that has an impact globally, not just the UAE. But the UAE market, just to discuss the UAE sector, the UAE market is seeing a dramatic increase in terms of property prices are going very high. There's a lot of demand, and they're always saying there's a shorter supply, so obviously it does quite balance out. What's quite interesting is that there's a lot of sectors that are going into the short-term rental rather than the long-term rental, and that's
Yeah.
something that seems to be picking up quite well, which is attracting a lot of international investors to more stability in terms of having a short-term rather than a long-term rental income. So that just gives them that flexibility. But there's, out of the seven Emirates, I think the Northern Emirates at the moment, which is Ras Al Khaimah, which is seems to be quite a hot spot in terms of the international win, which is a casino that's been opening. That's going to due to complete around about 2026 to 2027. Uh, that has really increased the Northern Emirates in terms of capital, property prices. So that, there's a huge influx in the Middle East. There's a lot of international buyers from the region of Russia, Far East. Then obviously you got the Asian market. So it is stability in the UAE at the moment. Compared to the UK, I think UK has a more mature market in
Yeah.
terms of stability. The UK properties intend to increase at a steady pace rather than increasing like in the UAE where they actually jump quite high, but they can also jump quite low too. So I think the UK market has always been close to myself, obviously coming from the UK and obviously working in that UK sector. I believe the UK market is coming out of a recession in terms of what's happened during the COVID period. I think during COVID, as a company, we did extremely well during the COVID period in the UK sector out of anywhere else. There's certain cities to invest in, for example, Manchester, which is a northern powerhouse, Liverpool, Leeds. I think these areas are attracting more investors rather than the prime London region. I think that's purely because of the prices, the capital appreciation, the rental demand. And you get a lot more professionals in terms of the universities that actually graduate and they tend to stay in the city where they've actually studied. And that attracts a lot of interest. So the UK property market, it's definitely seen an increase. There's a lot of fantastic projects that are coming up. There's a lot of regeneration, which is an influx of a lot of the council putting money back into areas where there's a demand. So that's always a key factor to consider. When you compare both the UK and the UAE, I think both is similar in terms of where they are increasing, but I always feel that the UK market will always be a stability market
Yeah.
compared to UAE. I think you're buying something that it's been there for nearly 200 plus years compared to the UAE, which has only been running for at least 50, 55 years. So I think that's the key to difference, which I feel makes a huge difference for someone that's looking to invest in any of these two countries.
Yeah, thank you for sharing that overview. There's a few things you mentioned there which I wanted us to touch a little bit more
Yeah.
on. So, for savvy investors, you've talked about short-term let. Could you, I mean, my experience is standard rental in the UK, where we call the AST,
Yeah.
and short let, you kind of see a massive increase in that, in terms of like 3 times or 4 times multiples in terms of what you could achieve. Could you speak a bit about that and relating that to the hotspots? You talked briefly about Norton Powerhouse and all of that part. I think it will be interesting for people to really understand
Yeah.
how is the short-let market, how is it changing the dynamics of investment?
Yeah, yeah. So it's a really good question. I think I think for someone that's looking to invest, which is to build what we call a BTL, buy to let property portfolio. I think the traditional has always been a long-term rental. So that could be a period of 6 months, and it could be a period of 12 months, and then you have a long-term continuous, someone's paying you rent. But a lot of developers are picking up into the market for the short-term rental because there's a more demand, and there's more interest for people who own these properties to cater for the sector, which is a short-term lettings. Now, what you find with projects that are actually in the city centre, the projects that are actually coming up now are more like a hotel projects. They're not actually your typical flats where you just walk into your rooms.
Yeah,
But nowadays, there's a lot of amenities, such as cinema room, gyms, rooftop bars and stuff. So it's fitting into that area where short term feels like a hotel. So your apartment block, it actually becomes a hotel because you've got all the amenities. So I think short-term rental is something that where you can you can multiply your income in terms of what you would normally get. So prime example in a Manchester city centre, if you're looking at a two-bedroom apartment, it could be anything between 1,600 and it can go up to 2,000. Now, the same apartment on a short-term rental in the same building could generate anything between 3,000 up to 4,500. So you can actually see the difference there, and that's purely because it's let on a short term. So as to how you manage the short term, that you have some great management companies that will actually fully hands off manage your property for you. So there's no headache in such as where you have to worry as to whom you are actually letting your property to. The whole purpose of the property management company is that they're pre-vet, they do all the due diligence to make sure the clients that are actually renting your properties are in a state to rent, and obviously they do security checks and stuff. So I believe the short-term rental is something that's going to be a hot topic. It's definitely picking up in the UK. Uh, it's like in a city centre, what you would normally pay into a hotel, where you just got the hotel facilities. A lot of people
yeah,
actually move into apartments. So it's like a home to a home. You're
mm-hmm.
moving from your own home, but you're going into another home with the whole features and benefits that you would normally get in a hotel at a fraction of a cost. And the locations are really key and quite important too, because they're in the major city centre locations. Plus, you've got a lot of amenity in terms of transport, walking distance to like the retail shops and stuff.
Yeah,
So the short-term rental is it's something that's going to be really fantastic. And as an investor, your returns of investments or your ROIs are going to be extremely high. And it's the same management that you would normally do for a long-term rental, but you're paying for a short-term rental. So it's the same cost. It's not any difference in
yeah,
terms of what you pay for the management fees, but it just means that you're getting something much better. Plus, as an international investor that wants to come into the UK, and obviously during the period that it's not rented, rather than for them to actually pay and live in a hotel, they can actually occupy their own apartment.
yeah,
So it just gives them a feel too. So it's a really great concept. And I think you'll understand yourself too, obviously coming from your own background that, long-term rental is good. If you're looking for like someone very long-term and hands-off, but I think you'll find you're going to get better returns on a short term, which is the whole purpose of investing in properties is that you maximize your returns, and that's something that's going to give you the benefits.
yeah. Thank you for saying that. So I think, I mean, the trend, as you mentioned, is seeing a lot of concierge services in terms of most flats and most blocks. So as a
Yeah,
company, one of the things we recommend is find the reputable company that can take care of helping you to find the sales and then managing all that process, which is something we do well enough. So, and I mean, we've partnered with you on many of that as well. So thank you for sharing on that. But
No,
I wanted to jump into maybe keep it simple and maybe explain what off plan is to people. But before we go into that, I know we've just talked briefly about off plan. And I know
yeah,
a lot of the projects, I mean, some of the projects we'll discuss, we've got different clients profile. And some clients want something different. Maybe they don't want off plan, maybe they don't want flats or something. And
yeah,
want to just share a little bit about projects around social housing.
yeah,
How can investors leverage on those type of stuff? Because we know we've got the stock on those properties, but a lot of people are not aware of those things. So yes,
yeah,
long standard let is what people are used to. Now we've talked about short
yeah,
let, but there's social housing that people are not aware of. There's students
yeah,
that people are not aware of. I think it'll be
yeah.
a good thing for you to explain what are the opportunities in those markets.
Yeah, so it's a very good question again. So I believe the social housing is a sector which is never really openly advertised. It's actually in return, if you actually look at the social housing, it's actually doing good justice in terms of you're helping people that are actually waiting to be homed, to be put into homes, like families and young couples and stuff. So there's a lot of history behind the social housing. The social housing sector, it's really focused on areas where there's not been much focus, such as like the northern parts of the UK. So what the council does then, the council actually becomes your tenant, not the people actually renting the property.
Yeah,
So that first of all gives you a positive revert that your council is actually never going to default in terms of your payments.
true.
Now, these social housing are totally hands-off turnkey properties. So you're buying something which is fully renovated, not just renovated from inside, but from externally, in terms of the roofing, the walls, the whole structure. It's
Mm-hmm.
also fully renovated inside in terms of the flooring, the central heating, the kitchens, the bathrooms. So you're actually buying something where your own money is not going to be used to upkeep the house, because the part of the contract for the social housing is that they need to maintain a standard of living.
Yeah,
That's how obviously the council will then obviously put people into these homes. The other key factor to consider about social housing is it's a long-term rental. So
yeah,
you're looking at least 5, 10, 15, and 25-year rental. So
true.
what that means that as an investor, you know for the next 25 years, you're going to get your rental regardless if it's occupied or not occupied, because there's such a long waiting list for people to be homes. This is where the social housing comes into it. It's a freehold sector, so there's no leasehold because you're
Yeah.
actually buying a house.
Mm-hmm.
Generally, the types of houses are terrace houses, mid terraces, end terraces. Generally, they range from like 1 bedroom, 2 bedroom, 3 bedroom. They can go up to 4 bedroom.
Yeah.
And like I said, it's a really good sector. Typical prices: 1 bedroom can start from £75,000, and 2 bedroom can go up to £98,000, and a 3 bedroom can go up to £120,000.
Okay.
Your return of investment is 9%, which is 9% net off the purchase price, and
Nice.
that is paid yearly. So obviously you get your monthly income along with the contract is there. Like I said, it's a freehold. So if you decide to sell, your exit strategy is quite easy because there's always a waiting list for people to buy these homes. So if you decide to sell after 3 to 5 years, obviously the property will obviously appreciate it.
Yeah,
Uh, Appreciation is not as high as what you normally would get in a city center location, but there
true.
is appreciation. Plus, you've actually made that rental income. So for someone that's looking to go into this sector, I think logically it makes sense to hold that asset because it's an asset that which is generating an income, which is a surplus of income, and there's no work to do in terms of management, upkeep, and general stuff. So that's a really good sector. The other sector that you talked about was the students, which is what we call the PBA, purpose-built student accommodations. This sector has also been operating for many, many years in the UK. So obviously, the UK has some of the renowned universities, which attracts a lot of international students.
Yeah.
So as an investor, someone who's looking to buy, the long-term goals for them is to bring into the children into the education sector. So the student accommodation is very similar to how the social housing works. It's actually smaller units, so the class of student studios. So you have your own kitchenette, your own bathrooms, I mean, like an ensuite. But it's more of a feel like an apartment rather than a student pod. So like, you probably remember yourself when you were at university, when we were at university, the student accommodations were nothing like what they are now. You know,
Mm.
nowadays it's more like a hotel. You know, it's a totally different feel. You've got like you got common rooms, you got like games room, you got the gym. So it's actually giving you that extra feel for students, and it
Yeah.
is targeting a lot of international students. So a typical student homes can go anything from like 75 and then they can go up to about £100,000. Typical types of returns, you're looking at 8% up to 9% returns, which is assured for 3 to 5 years. They're fully furnished. You don't have to be worrying about furnishing them, and they are rented for the whole period of the term. So it's a great asset to actually have. Like I said, these assets unfortunately are cash assets, so obviously a cash purchase due to
Yeah.
the price. But I think for someone that's looking to buy something where they don't need to do anything, the social housing and the student accommodation seems to be a perfect fit.
Okay. Thank you. Thank you for sharing that. Just to bring some numbers in, just for people to really understand. I know we've talked about this previously. So we talked about 9%, which is about what you get for social housing. So just
Correct.
for understanding, for people that might be wondering, what does that actually mean? So if you're thinking of 100,000 property, which is about what you get for a two-bed, 9%
Yeah,
means you're getting 9,000 yearly. It
yeah,
means that in 11 years, you've actually recouped all of the money you put in the property. And you have a
correct.
contract for 25 years. So everything after that, it's just profit,
Profit.
which is unbelievable when you think about it.
Yeah,
Because you have a
true.
security from the social contract to say we can do this for 25 years. And we know how the UK operates. UK is a welfare country, and they take care of things like this. So it's quite an important thing. And giving numbers as well to the student accommodation, I think there was one we looked at recently. I think it was about 88, 90,000. But there was one that
Yeah,
came to the market, secondary market for this one, and it's already completed. It was about 43,000.
yeah,
And I believe you're getting about 9%. So my calculation when I did that, we're actually in conversation with an investor that's looking to buy that. It's working out
yeah,
like in 10 years, you've already recouped your money. So you're putting in 43,000 thereabout on
yeah,
a student accommodation, and you're getting 4,000 plus net, which is
yeah.
quite a lot when people think about it. So the reason I
True.
wanted to highlight this is a lot of people just think about buy to let and they just go the traditional way to say, oh,
Yeah,
I'll get it buy to let. I rent it out on the standard AST. I might
yeah,
be getting £100 or £200, or if you're lucky, £300, but they're not
yeah.
considering how to be a sophisticated investor by learning how it really works. And that's some nuggets you've shared here. So thank you for
No,
sharing.
no, no worries. No
Yeah,
worries. Thank you.
thank you so much. So one thing else I wanted to say, and I think, I mean, I don't want to overgeneralize. I know a lot of the people I connect with understand properties, but we don't know where this video might get. Just keeping it simple, what does it mean really when we talk about off-plan projects, and why should someone really invest in off-plan?
Okay. Yeah, so the off-plan projects are focused on areas where you're going to maximize your capital appreciation. Because obviously an off-plan project is a time period between 12 months to 24 months. So between a year and 2 year period. So during that period, the construction is being developed, the initial capital appreciation, because bearing in mind each year, as the year develops, your capital is actually getting appreciated. Your property price is actually increasing because due to what's happening around the area. So an off-plan project is it's always a hot topic for us because I've probably say 70% of our clients focus purely on off-plan projects because they're actually built in area where there's a demand plus a supply.
Yeah.
And the quality of these builds are, like I said previously mentioned, they're like a hotel features in terms of, they're very, very high trend, very high premiums in terms of swimming pools, gyms, cinema rooms, the bars, like business centers. So it's like having a project where an investor is buying for a waiting demand, where people are actually looking to rent these kind of properties because
Yes.
you're targeting professionals for this sector, because you're not targeting for like unprofessionals. So it's a more professional sector, and
Mm-hmm.
due to that, obviously, you can actually charge the right amount of money for professionals looking to
Yeah.
occupy your properties. So the off plan is a very secure market. Obviously, as you mentioned, the UK is it's compliance and regulated.
Yeah.
There's a whole purpose to actually to obtain off plan properties. The developer will then obviously have to go through the whole planning permission, title deeds, the due diligence to make sure before they can actually construct. So obviously they're not interfering between the surroundings and stuff. So there's a lot of due diligence in when it comes to off plan. So as an investor that's looking to invest, he has nothing to worry because obviously the whole due diligence is done. And another key factor is anything that you buy in the UK has to go through a UK solicitors.
Yeah.
So that's also a key factor to consider as an investor, that your money is being going to actually the solicitors, not to the developer themselves. So I believe the off-plan sector is a hot topic. Generally the payment plans are really flexible. So, for example, Liverpool, they have projects which is the regeneration area of Liverpool, which is the waterfront.
Yeah.
You're looking at 20% for your initial down payment, then there's nothing else to pay until completion.
Sure.
Now, during that period of 18 months, what you've purchased, say, for example, a one bedroom for 180, you're going to see capital appreciation. And a capital appreciation could be anything between 8% up to 16% per year, depending on obviously the areas that you look to purchase. So by the time the property is actually completed, you've already gained equity in your property, because when we actually come to do the valuation, there's the equity there,
Mm-hmm.
which then obviously comes into to build your property portfolio. You can obviously look to buy something else. So I believe the off plan is it's a great sector. The developers are targeting areas where there's a demand, supply. The flexible payment plan is something that helps towards obviously investors, where they not have to do a lump sum payment. So they're doing a part payment, then obviously nothing to do. And at the time of completion, as yourself, you're a mortgage broker, you understand that there's options to actually to do mortgages, which obviously can then be applied 6 months prior to the completion, which is normally advised to do. So I believe that the off plan in the northern parts of the UK, like Manchester, Liverpool, Birmingham, it's extremely popular, and the quality of these projects are fantastic, because it's highly focused in areas where there's a lot of demand, but a lot of shortage of supply.
Yeah. Thank you for keeping it simple. I think this, in terms of off plan, there's a simple way I try to explain to my clients, because sometimes people don't really get this point. And
Yeah,
it's something that is hidden within the opportunities of off plan. So we know now with UK market and mostly every other market,
yeah,
buy to let, it's not as promising as it used to. There's a lot of tax
yeah,
implication and all of those things. So people know you possibly need to get into development to make bigger profits. And a lot of people, they don't have the funds to go into development themselves. I
true.
see off plan as like you're doing a joint venture with a reputable developer, and you're
True.
saying, I'll put in some money with you alongside in the next 12 months, 24 months. I know because of the UK market, this would have increased in value. And it's a fantastic way for people to actually think about it. Like, you know what, we're doing a joint venture with a developer. We
True.
have the guarantee and the trust that they are reputable and they will deliver on the project. But you're getting updates on the development progress. You are getting involved as much as possible, but you know that your money is growing, as against just leaving your money in the bank. Or for some people, leaving
Yeah.
their money in their property, because that is, I mean, I think that would be an important thing to talk about. A lot of people um, think and believe, oh, I bought my property and I just want to don't have a mortgage on it. And I try to help people to see what wealth creation is
Yeah.
and the equity you have in your property. Well, what can you actually do from that? What's your experience with that? What you recommend people to do? Some
Yeah.
people say, I don't have the cash to buy off plan or to do anything, but they are sitting on a gold mine
Yeah.
in their property. What can you say about that?
Yeah, so it's a really good point because you've highlighted some key sectors there. I believe someone's actually owns property where the property is built, and it's just sat there, and obviously they're generating an income from there. But for someone that's to build a property portfolio, it makes more logical sense to borrow the money from the bank rather than putting money from your own pocket. Because what you're doing there, you're actually releasing the equity from the existing property due to the market valuation. Now, the UK sector, the market valuation has increased. So the valuations are actually extremely higher than what
Yeah.
they were a couple of years ago. So that's always a plus point, and that will continue to happen. So
Mm-hmm.
someone, for example, Mr. Smith owns a property in the UK in Manchester. Now he has a rentum on a long term for about 650 or 750 a month. Now he's happy because he's getting a rental income, but he's considering of buying another property, but he does not want to use his own funds. Now, prime example is to actually remortgage or
Yeah.
refinance the existing property if he doesn't have a mortgage. That then becomes his initial down payment for a contribution either into an off-plan project or into a social housing or into a student accommodation. So what we're trying to explain here is that if someone owns properties in the UK, it makes more financial sense for them to remortgage and release the equity, borrow the money from the bank, spread that over a mortgage period of what, 25 or 30 years,
Yeah.
ideally on an interest only, because obviously maximize your returns.
True.
And that then becomes your cash injection to purchase your next property. And the thing is, the unique thing about this is you can actually continue doing this every 6 months. So, if you have a portfolio of properties between 5 to 10, you're looking at long-term retirement plans because obviously a retirement plans, these days pensions are good, but they're not reliable because everything's linked to stocks and markets and general stuff. But this is your tangible investment,
Yeah.
tangible retirement because you're physically seeing your property grow in appreciation. Plus, you're physically seeing what's happening around your property rather than putting money into a bank. And generally, if you put money into bank, the bank will then use your money to put back into stocks. So your bank's actually using your money to invest, but why don't you put that money into a property where it's a physical asset, a tangible asset? And it comes back to your question again, that is to remortgage, to release the equity. And I think logically, that's the right financial advice to give to someone that actually owns property, who wants to build a property portfolio for their future, for their kids, and generally for their own retirement.
Yeah.
I think it makes sense to rather than just having a property just sat there and its appreciation capital is to do a simple application, release the equity, and obviously from there look to build your property portfolio from there. But I think, like I said, this discussion is totally, we can discuss this quite a lot, but I think it's coming down to educating and giving that right advice. And I think if
Yeah.
people are not aware that equity, how it works, or how the mortgage sector works, then someone's not really going to understand if they're not being educated and not being told. So I think it's quite key to educate people that you can expand your investment portfolio. And the simpler way to do it is to remortgage and release the cash to purchase further.
Thank you. And I like what you said about you can do this on a repeat. It's like
Yeah,
we're recycling the same cash pot or equity
exactly.
pot and recycle it and build your property portfolio, thinking about generational wealth, not just for now, but for the future. So thank you for doing that. You talked about
No,
leveraging, which is quite an important thing. And I just don't want us to keep it to UK or stuff because I know you do a lot globally.
yeah.
How does leveraging, I mean, maybe in simple terms, or financing, how does that work both in UK and in Dubai. I think it will be good for people to have an understanding of that.
Yeah, so the UAE sector, so we'll start off with the UAE sector. So obviously my background is financing and banking, same as yours. So the UAE sector is not as regulated and compliance when it's compared to the UK sector.
Yeah,
So the UAE sector has a central bank, and obviously it has the central guidelines which the banks follows, and mortgage brokers like us, we have to follow. What you'll find the difference in the UAE and the UK. So the UAE, there's not many mortgage products. So there's either a fixed and that's it. There's either a fixed and a non-fixed. So there's not like in the UK where you have a base rate tracker, wearable options, fixed rate tracker rates and general stuff. So in the UAE, it's very simple. It's either on a fixed rate or on a non-fixed rate. The other factor to consider is the loan to value, so the LTV.
yeah,
So obviously here in the UAE, if the property price is below 5 million, then you're looking at around about 75% LTV. If the property price goes above a certain threshold, which in this case 5 million, then the central bank will then reduce the LTV by 5%. So that also has a key factor too. The other factor in the UAE is that the typical mortgage repayment term is capital and interest, so that it doesn't offer you an interest-only mortgage.
yeah,
So what that means is that your return of investment for an investor is going to be much less because you are paying the property capital portion plus the interest portion.
yeah,
In terms of criteria to secure a mortgage, as a UAE resident who actually has an Emirates ID and general visas, it's normally 6 months bank statements, pay slip, salary letter, and then obviously you go ahead and do an initial AIP, a mortgage in principle, then obviously that secures your mortgage.
yeah,
Um, there are certain banking fees in terms of like processing fees, valuation fees, and obviously that can go in a bit more in details. But now, if you were to compare that to the UK sector, what you'll find in the UK, there's more options in
yeah,
terms of repayment because you have an interest-only option. Now, interest-only option is always advised if you're going to go down the buy-to-let route because obviously you're maximizing returns. Plus, you have more mortgage periods, so more mortgage products, so like fixed trackers, discounted rates. The other key thing, which I think is very important, is that you're going in the UK sector where there's compliance and regulations.
yeah,
So obviously, some people think that, oh, why do we have to go through these regulations? I think they're there to protect and safeguard the individuals that are actually buying. Because
true.
obviously it's good to be in a regulation sector because the UAE, unfortunately, isn't regulated in terms of, they are slowly coming into it, which they are following the UK process, but I believe, and I'm coming from a UK background, which is mortgages and banking, you know, for an individual that's going to go into the UK mortgage sector, I think it does give you that peace of mind that you're going into a sector which is compliance and regulated.
Yeah,
Another key factor is that in the UK, as soon as you get onto the property sector, that builds your footprint. So when I say footprint, it builds your credit footprint, your
yeah,
criteria to do future lending. The other difference is the LTV is 75% for investors that are looking to buy in a buy to let. In the UAE, the first property they'll give you the highest LTV. Your second, your third, and your fourth, they will drop it down to 65%. But in the UK, you can have more than 5, 10 buy to lets and it'll be still 75%. So
true.
that's another key plus point for the UK sector. The general mortgage tenor or the term that they call in the UK can go up to 30 years. But
Hmm.
in the UAE, they will only consider you up to the age of 65. So if someone's at the age of 50, they can only get a term of 15 years. But if someone's at the age of 50 in the UK, we can take them up to a much longer period in terms of loans.
True.
Uh, Cost-wise, it's very similar. You tend to pay a little bit more in the UAE in terms of bank processing fees are much higher. There's evaluation fees are much higher. They range from anything from like 2,500, 3,000 dirhams. So when you compare that to pounds, you're talking over 1,500 pounds just to do evaluation. And I believe the time period from start to end is very similar. It can
Yeah,
take anything between 4 to 8 weeks. It's the same for the UK sector too, anything 4 to 8 weeks. The only difference is the UK will obviously involve a solicitor at some point, but the UAE doesn't involve any solicitors because when you're doing a mortgage, there isn't any solicitors or you're buying a property, it doesn't really cover. But I think that we can cover that on a different question. But I think when you're comparing like to like, I believe the UK does offer you a bit more in terms of repayment options are better, interest rates are slightly
Yeah.
better. The criteria in terms of borrowing more loans, you're borrowing more rather than putting more in yourself. And when you compare it to the UAE sector, it's straightforward in terms of a fixed period and an unfixed, but yet loan to value is actually much less.
Okay.
Other key factor is, as a non-resident of the UAE, the
Yeah.
banks only cap it up to 60%. So that means that you're only borrowing 40% will be your contribution, but the bank will only lend you up to 60%. So the criteria is slightly higher, where they will need to see at least 25,000 dirhams, which is around about, I think about £6,000-7,000 a month to be credited to your account to be qualified as a UAE mortgage. But when you compare that to the UK, uh, first of all, you can actually borrow 75%, so you're borrowing more.
Hmm.
Plus, it's based on your rental income. So it's not just based on your purely income, but they also consider the rental, which the UAE don't actually consider in terms of your buy-to-let income. So I think this topic is quite a detailed topic. Uh,
Definitely.
that every individual has their own needs and demands. Every profile is different. So when we actually do an application, we do like a fact find. We go into a bit more details and we try to understand, what history they have in the UK or the UAE. Then from there we can obviously advise and talk a bit more from there.
Yeah. Thank you. Thank you for sharing that. Just briefly, because we have together done quite a few um, mortgages
You have, yeah.
financing for people from Africa. And I mean, a lot of Africans, and maybe this applies to other countries as well, they don't think they can get a finance in the UK or maybe UAE as well. Maybe if you could just quickly talk about that, because in that sector, they are not used to financing and the leverage possibility. And I think it'll be a good thing for people to actually understand that they can actually get financing,
Yeah.
even if they are from Africa.
Yes, as a company, I'd probably say 60 to 70% of our business is actually West African clients. So obviously clients like Nigeria, Ghana, Cameroon, and your neighboring countries, and we go down to South Africa, Kenya. So that's our pure focus for ClipPad. So obviously our clients actually come from that region.
Yeah.
It's a great question that you've asked because a lot of them do think that they're not eligible for mortgages in
Yeah.
the UK. You'll find there are a lot more banks that are actually opening the idea of lending for international because the people that are actually buying properties in the UK who are actually becoming landlords are international buyers
Yeah.
because it's targeted for international buyers. Because the UK sector, someone's working and living, they tend not to buy for investment, they buy for end users. But for an investor, it's I'd probably say 80% of it actually comes from international. So I think obtaining a mortgage is not difficult. It's giving the right guidance and the right advice and working with the right company to talk you through. It's a step-by-step process, and I think we do our due diligence prior. We understand the client's needs and his financial needs, and I think having the right company like yourself that can educate and guide them, and obviously structure the whole application from start to end. So when I say structure, there's options to have a mortgage on a limited company.
Yeah.
So for an African investor that's looking to buy, it's always advised to open a UK limited company and then do a mortgage under the limited company because the underwriting is much easier.
Yeah.
So plus there's a lot of tax benefits too, because obviously I'm not a tax expert, but there's a lot of tax benefits in terms of CGT, inheritance tax, gifting properties and stuff. So I
Very true.
think to your question, it's not difficult obtaining mortgages for international African region clients because we've been doing this for many, many years and we've never had any issues.
Hmm.
Obviously, each one is treated differently because obviously some people may be employed, some
Yeah.
people be
Different scenarios.
employed. And I think what would we advise is that, when someone's applying for financing, it's always better to speak to a mortgage broker like yourself who understands the UK sector, the regulations, the guidelines, who can then advise and structure the whole application. So when it comes to submitting, we're not going back and forward in terms of
Mhm.
documentation and stuff. So everything's very streamlined. But the plus point is that, yes, mortgages are available for international. for the West African region, and it's never been an issue for us for the past many years that we've been doing in this business. And I believe you can confirm that yourself too, which you come across day to day
Yeah,
clients from the region.
definitely. Yeah, thanks for highlighting that. I think as a business, one of the advantage, especially for African clients, is I have an understanding of how things work in
Right.
African setting and helping them to be aligned to the mortgage requirements, just taking them through their education. But again, a lot of people miss that out because they get the wrong advice. So thank
Exactly.
you
Yeah.
for highlighting that. I know we've seen different movements in the market. We've seen different, we've seen different stages and through different years. We've experienced recession and
Yeah.
market dip and stuff. So I just don't want this to just be selling stuff. This is not selling. This is education from experience, and which is quite
Yeah.
important. But I'd like us to talk about what are the pitfalls that people should be aware of, and how can they avoid it, especially purchasing property in the UK, either as a UK resident or Dubai, or buying from abroad? What are the pitfalls? What are the things? Because it's not always things go wrong. And when it
Yeah.
goes wrong in property, it could cost people a lot. So what
Yeah.
those things that people need to be aware of so that we have a balanced structure to this discussion?
Yeah, so another great question. I think when it comes to investing in the UK, while we're talking the UK market, obviously pitfalls could be the general what's happening in terms of the economy, in terms of obviously if there's an effect which is happening global, for example, what's happening in Ukraine and what's happening in the Middle East. Obviously, that does have some sort of ripple effect in terms of obviously the currency, which is the main sector which obviously has a back foot. Because the first sector that has an impact is always the currency, because obviously the currency then becomes slightly weaker. But for an international investor that's looking to invest in the UK, you may find that their currency may be stronger than the pound. Because when they're exchanging the dollars or changing naira into any other currency, then obviously they have an upper hand. But the pitfalls, I think it's working with a company that's going to advise you and guide you through the process rather than working with someone that they've heard someone online and they not know much about themselves. I think it's always advised to do their due diligence to make
Yeah,
sure that they're coming into a sector where it's good hearing from us, but I think it's always advised to the client and say, look, do your own due diligence, do your own research to make sure that you are entering the right sector. Then obviously we're always here, and like yourself, you're always there to guide and advise. I think other impact could be, I think during COVID was a prime example. I think during COVID, there was a lot of process was slightly slow due to restrictions.
yeah,
But I can assure you, during COVID as a company, that's where we made a lot of money because a lot of investors were buying in the UK sector. There weren't any delays in terms of development because as a company, we work with developers that are renowned,
yeah,
developers who are self-funded in terms of financial ready. We do not work with small developers where, yes, they're attractive offers, but in terms of stability, they're not going to be there. And these are the companies that actually seem to tremble during this period. So I think another key point is that the Bank of England base rates is becoming more stable. It was actually at the highest point, which had a ripple effect in terms of borrowing and stuff. So that's all reversing now. So everything seems to be picking
sure.
up. But I can't really pinpoint to say that there's a pitfall. And I think my advice to anyone that's looking to invest in the UK is to work with a company like yourself or like us that understands the UK property sectors,
Yeah,
who has been doing it for many years, and we can then obviously advise in terms of areas to invest and what projects and which developers to work with. We always are very transparent. We can always get the developer involved in terms of meetings and general stuff. So obviously that gives them the assurance.
mhm,
But we'll only work with developers that we know that have a good reputation, who are actually have some history of completing projects, And if someone physically is in the UK, they're more than welcome to actually go to these developments, and we can show them around the completed projects,
Sure.
speak to the developers so they know that yes, they are buying something which is going to be. But other than that, I think other than the COVID, I think there was not really much
Much. Okay.
impact other than what's happening around now. But I think that has a ripple effect everywhere, really. If there's a war going on in a certain part of the country, then the oil prices increase, the fuel prices increase, but it doesn't really impact the properties, and because obviously the properties is something that people need to live in. They need to
Yeah.
buy something, and obviously the mortgage rates, yes, it could have an impact. But I think that's also reversing now too, which is obviously, especially in the UK, where everything seems to be coming down, which is a great time to put money into.
Okay. Thanks for that. I think there's a lot of things you've highlighted now and before. I mean, the tax
Mm.
situation, all of those things might be the reason why people think I don't want to invest in property. But I think
Yeah,
one of the things that I always highlight is, and that's something you do well enough. Um, I love talking about properties. I get
yeah,
access to a lot of properties, and it's not just selling property. It's giving the
yeah,
advice from a
mm,
mortgage financial advice point of view. How does that affect now and for the future? So it's more of thinking of a holistic approach. And I say property is a long-term gain. You have the cash flow, you have the capital growth to consider as well. So there might be certain times where there's a dip or anything, but we know that there's not sufficient properties being built anywhere in the world, especially in the UK, and it's a growing sector. So while there
yeah,
might be pitfalls for people not doing the right thing and maybe going just traditional, I think a lot of the things you've shared, a lot of the nuggets you shared here is
yeah,
actually correcting those pitfalls. Like if you are looking at the short-let opportunities, you're looking at the student accommodation, you are working with a reputable company that understand the mortgage process, think about now and a long time. You have actually corrected a lot of those things. It's not about sales. It's about giving you the right
yeah,
advice for now and for the future. So I think that's something I like the way your company operates in that space. So thank you for that. Yeah,
uh,
there's a lot of nugget being shared here, and I think we can go on along a lot more. I've just got a
we
couple
can.
of questions.
Yeah,
Just I know
yeah.
your time is precious, and I don't want to take that for granted.
No,
So really thank you for giving us the time. And I know it's Friday for you; it's busy as well, but really appreciate
no,
your time. There's just a few things I wanted to what do you see? I mean, the market keeps evolving, and maybe you've touched on this before, but how do you see the market or the property sector or investment generally? How do you see that evolving in the next 5 to 10 years, either
yeah,
in the UK or Dubai or globally?
yeah.
What what do you see coming?
I think for the next 5 to 10 years, in the sector, for example, the UK, it's going to see a huge, dramatic change. And that's already having an impact already. And I think, when the rates and the Bank of England decides to have rates reduced,
Yeah,
when there's a new political party that comes into politicians, I think that makes a lot of a ripple effect, that has a ripple effect. But there's always a demand and supply. There's always a shortage of supply, but there's more demand. And I think that's always been the issue, not just in the UK, but generally everywhere else.
yeah,
But I believe that the UK sector is actually seen an increase in demand. There's fantastic opportunities for
yeah,
an international investor to come into the right time. So when I say the right time, there's a lot of money being injected into areas such as Liverpool,
yeah,
certain parts of Manchester, Leeds, Birmingham, where there's regeneration focus. So when it's regeneration, you're talking about 20 million, 20 billion, 50 billion injection money being invested into increasing the demand, increasing the areas. A prime example, Manchester, the city council is actually looking at the red brick area, which is the northern part of Manchester, so the
yeah,
city parks. So it's looking at the attractive areas, not just looking at young professionals, but it's also catering for the families,
true.
and also catering for working professionals too. So I think as an investor, this is the right time to put money into the UK sector, because into areas like what we just discussed, because you're going to see your money work rather than
Mhm.
having your money in a bank, because your bank's not going to do anything for you. You know, you're lucky to get 1%, 2%, or 8% interest rates, because all the bank does is actually reinvest your own money back into stocks. So it makes more sense to put that into a tangible asset where you're actually seeing it appreciate. And I think that the UK sector is a fantastic sector. It's a much secure stability sector in terms of any other countries. If you compare it to the UAE, the UAE is also seeing a great impact.
Yeah,
But what you'll find in the UAE, things tend to increase very well, but they also can drop very well too. So that, it's a very volatile market.
yeah,
And I think UK is a more stability market where everything moves at a correct pace. It doesn't run fast and it doesn't run very slow too. So I believe, this is the great time.
yeah,
There's a lot going on in the UK. Yeah, even the UAE, if you're looking to invest in the UAE, there's some great investments in the UK, UAE, UK. Both offers, flexible payment plans. You have options to buy mortgages, to take mortgages on these purchases. And I think, yeah, the UK, coming back to the UK again, I just believe it's a sector where it's regulation and compliance, and I think that has a key impact on your purchase, because you know that your asset's secure.
mhm,
It's in an area that's going to appreciate. The UAE also has plus points, because obviously there's a high returns in terms
yeah,
of capital plus rental. What you find, the rental is more demanded here, and obviously recently for the last 2 or 3 years, the prices have actually increased quite a lot in the UAE sector too, in certain areas in the Emirates. So I think a very simple answer is, obviously it's never a bad time to invest in properties,
yeah,
because obviously properties, you invest in properties, it appreciates as the country appreciates. Now, if you're investing in a city that's already developing and there's regeneration going on and there's money being pumped into these areas, then you're going to see your property appreciate at a steady pace, but at a good pace where you're looking at a long-term future in terms of capital and rental and stuff from there. So
yeah.
hopefully that's clear.
Yeah, thank you. That covers quite a lot, and I think there's this. I believe it's a Chinese proverb which says the best time to invest is 20 years ago.
Yeah,
The next best time is now.
correct.
For a lot of people, I said if you've lived in a property before, if you bought your property before, you would have seen capital appreciation on your property. So it's
Correct.
just a simple indication of saying what would happen in 10 years' time. If you have the power of insight, you would have bought more property 10 years ago. But
Yeah, exactly.
so every time, 10 years from now, 5 years from now, it's going to
Yeah,
be very different. And I think connecting that to education, really in property, we always talk about location. That, like you
yeah,
mentioned, there's a lot of regeneration going on. There's a lot of infrastructure going on. That's massive, major infrastructure that's going to be delivered within a short time and stuff. So it's
correct.
really finding those regeneration and infrastructure and partnering with the right
Yeah,
company with the right
yeah,
education to actually take your money and multiply it beyond what you can think of as an investor. So I think for anybody listening to this is really just thinking you might have been interested in property and don't really understand much about property, but we've talked from the point of view of being a mortgage broker, working
yeah,
financing, and educate and advise people on how to manage and grow their wealth and keeping it simple, using property as an asset structure that helps people to do that. So I think it's finding the right education and partnering with things.
correct.
So I mean, one last question before I ask you to share a bit about how people can connect with you and the type of
Yeah,
project and stuff. I think one question is really um, for people that might just still wonder what this is about, can you share like a success story? I know you've got plenty we've discussed, some we've
yeah,
worked together with. Just a success story of someone, how they've invested in international property markets and what has
yeah.
that been for them. If you could share
Yeah,
just a
yeah, sure. So we can give you a great example of is our good investor. He's actually from Nigeria. He's a business owner. He's in the hotel business. Uh, he travels to the UK quite often. He has family in the UK. He also travels to around Europe too. So he was introduced to us by a colleague who sold something to him. Then obviously that's went quite well. We came to know him in nearly about 4 years now. 4 years we've known this client. So 4 years ago, we advised him to purchase a couple of properties in the UK, many around the Manchester region. These properties were then obviously completed uh, re in terms of obviously rented, and what he's actually purchased at the time and what they are now in terms of capital, he's actually made a lot of profit in
Yeah,
terms of capital appreciation. So over a 2 year period, he made around about 80 to 90,000 pounds just in capital, which is his equity that he's built, which was the recent valuation that we did.
yeah,
We also have another example is either another Nigerian, he's a developer, a well-known developer in Nigeria. He moved his children to the UK for education purposes. He also bought in Manchester in the right area in Manchester. These are fantastic developments by Renica. High apartments like a hotel features raised anything between 50 plus floors. What he bought, 3 bedrooms at that time were around about 480,000, and the recent market valuation less than 2 years is about 600 plus, 610,
oh
620.
wow,
You can actually see the capital appreciation.
true,
And I think it comes down to location again, which is a key topic in properties. And I think it's also advising where and when to buy. And I think both of these scenarios were purchased off-plan properties. And as mentioned to you previously, off-plan property, if you are purchasing in the right locations at the right time, which is never a bad time, then you are going to see your money work.
hmm,
Like I said, both of these have come back to us on multiple occasions and bought more properties. Now the first client's bought another property, a 3 bedroom, which he's looking to move his family into, which is in the Red Bank area in Manchester. He's purchased that at 420. Those were actually sold within 12 months period. The whole project was fully sold,
yeah,
and that's due to complete in next year. So he's going to see some great appreciation because that area is where the regeneration area is in Manchester. We always advise our clients. We give them the advice, we give them options, we consider what their demands are and what they're looking for, and then from there, it's our job to educate and advise. And I think I can give you a lot of other stories and examples that we have clients, and I believe both of these clients are, really happy with our services, and
yeah,
they continue to give more business. And the key factor is they keep coming back to us to build a property portfolio, and this is what we want to do.
yeah,
We're not here to do one
okay,
transaction, then we don't see the client. And I think it comes down to educating. And I think if someone wants to build a property portfolio, then we know how to structure that, and we can advise you how to build your property portfolio.
yeah, okay. I think that's quite important, and thank you for sharing that. I think from a lot of African clients to deal with, I think it's that um, looking for the future towards their kids' education, or
Right.
for quite a few, is diversifying their wealth and
Mm.
creating wealth outside the country they are. And for some, it's really just expanding their business outside Nigeria or Ghana or anything. I
Yeah,
mean, there's this unique aspect a lot of people are not considering yet. I think most Africans have very low leverage in terms of financing. And what some of my clients are doing now is to build a footprint in the UK, where
yeah,
over time they can use their assets and their business in UK to start getting finance and support
mm,
their business in Nigeria, which is a fantastic thing because I mean it's like you're getting 5%, 7%, and you're doubling or tripling that in any investment you're doing outside. So it's a
true.
long-term view, and that's what I like in terms of what you do. It's a relationship thing. It's not just buy one stuff. We want to build with you.
Yeah,
We want to create wealth for the next generation and support you all the way. So thank you for sharing that.
No worries.
I'm sure we will get you on again. There's
No worries.
a lot in there that we've not been able to share. I wanted to just at least start this first, and I think we'll think of maybe do a bit of deep dive into one particular area. But for today, you've shared a lot of nuggets, and I'm sure people that are listening to this would want to connect with you. What is the best way for people to connect with you? And in terms of your parting nugget or your parting wisdom, what do you want to leave us with today?
Yeah, so I think the thank you for your time today, obviously, Deji. Is, obviously we've known each other for a long time now, so obviously we've done some great transactions together. So appreciate obviously for this podcast today. I think for us, it's really easy to contact us. You can visit www.clickpad, so that's CLICPAD.com. Obviously we've created a platform is purely to attract international buyers, where one platform access everything from start to end, from reserving your property, selecting your solicitors, conducting your AML KYCs, and exchanging contracts. Clients can sign up for free. It doesn't cost them anything. It's, we update our property portfolio on a daily basis. We're off in the UK plus the UAE sectors. And we're always looking for partners to work with us to obviously to build and obviously to cater. So I think that's the simplest way to contact us. I think it's always good for them to go into our platform and they can browse and obviously contact us from there. And I think what I would say is that the timing for now is always the best. There's never a bad time to invest, especially in properties, because you are actually buying something which you actually see and appreciate. And I think, the cost of borrowing money in the UK is much cheaper if you compare it to West African region, because, I know the West African region, I've traveled to Nigeria many times, the cost of borrowing is anything between 18% to 28%. And it's normally over a 36 month period. Like if you compare that to the UK, you can borrow the same amount of money at a rate of interest rate between 5 to 7%, but over a longer period because you're spreading the cost.
Sure.
So I think it's a great time. The UK property market is a booming market at the moment. In the certain areas where there are infrastructure going on, there's a lot of demand. Even in the UAE, if you're looking to invest in the UK, we're here. We understand the UK projects. We work with all the developers. And I believe the Northern Emirates in the UAE is a sector to focus on, because the Northern Emirates is like 3 years what Dubai was. So it's the right time to come into that area.
Yeah.
And I live here myself, so I understand this sector. So yeah, I think it's a great opportunity. I think we're here to educate people. We're not here just to sell. We do that on a good basis. So we do that extremely well. So we're not here to sell on this platform. The whole purpose was this to educate, to guide, and to hopefully, any questions people have, then they can contact yourself or contact us, and we can obviously assist and guide them from there.
Yeah, thank you very much. I think between us, I think we've shared quite a lot of things in terms of helping clients grow wealth globally. And if you're interested in property and you listen to this, or you just want to see how it works, and you want to work with Azim and myself, we've got a partnership with ClickPad that connects you to every property. So you can have access to myself and Azim. And a lot of times we just go through like a section with a client to understand what you're looking for, and then help you to guide where you should be going. So what you are currently, what you're looking for, what kind of funds you have to work with, what's your plan for immediate and for the next 10, 20 years. And we can start creating a portfolio for you. And there are a lot of things else that we share on those sections. So if you want to get some time with both of us, I think, yes, I would share all the details for you to be able to book a time with Azim from ClickPad, or myself, Property Concierge. But together we work quite well. And that's the reason I wanted us to come on this podcast to share a few things. But thank you so much. I can keep you here for much longer. I know we talk a lot, and I know we do a lot of testing, but I just said, let's bring something out and share some of the things, because a lot of people ask me these questions and I feel like, you know what, and it's really lack of education. And the more we can provide value upfront, the more they can trust and then see the need to work with us. So if you're out there, Nigeria, UK, Dubai, or anywhere, we would like to work with you, and you can get in touch with us and we'll be able to help you. We can help you think globally. Thank you for listening, and I'm sure there'll be a lot more videos relating to equities and investments. So please find your way and your time to come and listen. But reach out to us if you have any question. Thank you so much. Really appreciate you guys. Thank you, Azim. Really,
Sorry, no, thank you. Thank you.
Bye.
Right.